All right, my good friends out there in the land of XM, and all of you who may be watching on our social media platform, YouTube or wherever else, welcome to today's session. This is US Market Open. I'm your US guy. I'm here to take you through the next 60 minutes to educate, entertain, and enlighten you on all things market related. Now, do me a favor. I'm going to be here for an hour, one way or the other, right? That's the deal. So make use of it. Ask me some questions. Talk to me about your trades. It's Fantastic Friday. We got one foot in the weekend, right? One foot in the weekend, but we still got time to make some money. We still got time to make some money. Market opens officially here in 30 minutes. We're going to talk about a few trades. So I hope those that come from the YouTube channel, you get a chance to just stay with us through the next hour because we will be making some live trades. Maybe we'll get one in before you leave. But again, the purpose of these sessions is to educate and to point you in the right direction and just try to make some better decisions with your trading overall. So it's my pleasure to be here today, as always, on Fantastic Friday. Boyke is with me. This is going to be good. I'm bringing the heat. Jamal, hello. Jamal wrote hello in caps. Hello. Hello to you. All right. So here's where I'm going this morning. Jamal, I think this was you in the last session. I'm looking up there at the notes, US 30. I'm really liking the trading on this instrument here lately. It's got a little patch of volatility. I've got a 1 hour chart here, but you'll notice there's been quite a few dips. This is exactly the way we wanted it to work yesterday. Let me pull up a daily chart because I think you're going to get another replay. Here we go. This is your daily. We were talking about this yesterday, right, guys? And we were looking at this little support area right here from about a week back. Take a look at where you got there yesterday, right into that level again. It was down about 350 to 60 points before it made its reversal. It's down 350 to 60 points here again. Welcome, house guest. So let me show you what let's look at yesterday and see if this market gives us the same thing today. Because I think that's pretty good. All right. So you'll see you get a bounce here yesterday. Here was your 5 minute. Really nice. All right, take a look at this chart. So you start out, you're very aggressive, and you just drive. This is my favorite kind. When we do those reversal trading sessions, this is what we talk about. The speed in which you get to that target. So when you're coming into support, if you slowly fade into support and melt down, it's a different transition than if you just waterfall straight and kind of puke right into it. It's exactly what it did, right? And look at that reversal, guy. I mean, look at that 100% reversal, more than that from, right? Look at the power of that, right? 5 minute chart. Now take a look at what we had here yesterday. This is what we want to look at. So I agree with you there, Jamal, on that gold. I'll get to that in a second. I think there's another trade there too. So what I always suggest for traders to do, this is great for the people that might be tuning in for the first time, to answer all of your questions on how a move takes place. What do we always say? Look left, look for the clues, look for the signals that before this rally took place, right? What actually happened right here? Like the secret to this rally is exactly in this space. The answer to that is here. And I'll show you what you have with this real quick without wasting time. This was the daily support. Now, when it comes to like daily supports, daily resistances, they don't always have to tick it to the penny, right? You don't have to just hit it and reverse right there. It's kind of like a zone. Like when you get close to that, you should start selling if it's resistance. When you get down in there, you should start seeing some kind of buying effort at that support. And you'll see that. You start getting this buy, you rally back up, right? Kind of like a little double bottom. And then you get another test, right? Now, Boyke, you still with me? I'm going to test you on this one. You've been so good. You've been so good lately. What do we have here? Take a look at this. A little lower high, right? Kind of failed short there, right? Pulls back in, revisits. Buyer shows back up. Then once it makes a higher high right here, right, taking out this previous high, right? Which is the entry. Look what happens. It gets parabolic, right? There's that higher high, higher low, lower high setup. What that does is give you a tiny bit of confirmation. So take a look at us now. We have somewhat the same move here, right? And it just blows through that support pretty quickly. And then you move down in here and you're much deeper. Now let's take a look at this level. I'll tell you why I want to watch this one today. This is a super, super heavy duty level. 35, what do we got here? 30, 38,260. Let's say 38,260. This has been not just like every time we look at a level, the question is, what kind of level is this? Is this a temporary level? Is this a short-term level, a longer-term level, or what's the impact and the meaning? And I think you guys can see it. It was about a 3-day bottom that came from the most recent correction that the markets went through. Before that, it spent quite a bit of time, revisiting and finding support in there, right? So like we always say with these sessions, right? What are we looking for? There's a deep buyer in here. There's somebody with excessive sizes with an intent to accumulate and buy here. So you're really moving into that here this morning. Kind of unfortunately, we bounced a little bit. Let's go back to the 5-minute. But here's what we're looking for. You'll see, does that buyer show back up? Yes, right there it is, right? So you come back in, you re-rally, and you come back in again. There's a double bottom right there. There's 2 pieces of verification that the buyer has showed up on 2 different occasions already, and then you had broken this previous high, and here you are. I would like to see when we open just one more test if possible down here. And I think if this gets revisited, and I think we can catch that same move. I think at some point, that's exactly what's going to happen. You're going to get another move. They will buy this dip. I'm almost positive they will buy this dip like this, right? See, every day you're getting that. You're getting these pretty rapid, excessive. I would expect this. Let's try to see if we can time this here. Hopefully there's at least an opening where it doesn't get too aggressive to the upside. But let's watch it. Yeah. You guys see what I'm talking about? You see it? See it? Okay. So let's go to gold. Sell position 23.35, target price 23.06. Okay. I kind of like this one for a short-term short, followed by, I think next week you might get yourself a little breakout here. But let's deal with first things first on this Friday. Let me find it here. You always have to give me time. I'm running around here looking at this stuff. I can never really find it. There's gold. Okay. 23. That's a pretty good entry, Jamal. Pretty good entry. Yeah. Yeah. I agree with this trade here too, because again, I think, Ninad and I had this discussion in length a little bit earlier. If you guys were at that session, I think some of you were. But the way I look at a market, it starts with the level, right? You guys know this. It's the level that matters the most. Not every numerical number that you're trading has value to it. Sometimes there's a patch of randomness that gives you random results, right? Good charts, good results, random charts, random results, crappy charts, crappy results. Your results are a reflection of the way the chart is operating. So the difference between an amateur and a pro is an amateur just tries to trade every chart, right? You try to, that's a setup. That setup, it's a flag pattern. I'm trading that chart. It's a head and shoulders. I'm trading that chart, rather than the instrument itself and the way that it's currently behaving in the recent cycle that it's in. Somebody, I think, was it you, Jamal? Somebody mentioned ATR in that session, average true range. This is what we're talking about in terms of making a trade and being flexible. So here's what I'll say midterm. Let's go midterm, short term. These are great. This is a great example of the lessons that we teach here. And I want to talk about it with gold for a second before the market opens real quick, because you get an opportunity to teach someone in real time here and show them what it is we're talking about what it means to be a trader. You take advantage of a moment, and this is a prime moment for that. Being a trader is trading what is the next likely scenario. So if you were to ask me for the midterm, where do you see gold going next week, 2 weeks, 3 weeks? You may have heard me say later, I believe it's going higher. Now, just because I believe it's going higher doesn't mean I'm putting all my money on this right now. Like, don't run and buy it right now. That's not what I mean. I think and feel the chances are, percent wise, I deal in percentages, that you probably have a 70% chance of moving higher. Now, why would I say that? Like, what would make me say that? Well, you were already breaking out here on the daily. So you had a pullback. This is a higher low, right? This low is higher than this low, right? And I want to show you how this kind of works. It'll help you out. Yeah, I'll get to that second there, Jamal. I'll show you how this works. Let's talk a little bit about thinking this through. So this was a breakout. Now, news came in and ruined that breakout, right? That happens. That's why you always have to be on guard when you're trading. There's that unexpected news event, the unanticipated, bam, there it goes. You got to get out. That so it ruined your trade if you were already long. It ruined the potential for this to go back up to the all-time highs. But here's why I would suggest there's a couple of pieces of data. This sell-off is aggressive, but it's just one day. Right? It was only one day of panic. It reaches that support again. Remember, we're talking about levels here, like the Dow Jones. It may look like it's going to plow through that, but it's just going to get down in there. And that buyer who's been relentlessly showing up for months on end is most like, again, percentages. The percentage chance of that person, that entity, that unit, whatever you want to call it, reemerging there to buy is super high. Right? Super high. And exactly what happens, they show right back up, right? And then pop this. You'll see we've actually made a trade into that support and sold the rally. Now, again, the report yesterday, right, gives you another flush. But look, this buyer shows back up again. This person or entity, whatever, is relentless on this dip, right? That's what I wanted to point out. You see that. And now you're reversing. So what that means, and it's rising support. These wicks are higher. So if you're going to sell gold, it's going to take a mountain and an act of the trading heavens to push yourself through that. Does that make sense? Sure does, doesn't it? Makes sense, right? So that's why I think the chances are it goes higher, because they're constantly accumulating it. But I don't see that the situation today as the best choice. I agree with you, Jamal. Once you start getting extended and you go past your average true range and you start getting too short term, like a 5-minute, 15-minute, 30-minute, 1-hour chart, you start getting short-term overbought. The same rule applies here in reverse. There's obviously a very large seller right here. This is the beauty of the chart. It's already showing you where someone is located. That's why the chart I use is clean without indicators. It's clear. There's seller here, right? You got seller here, seller here. Like you can see all the peaks. There's sellers here, seller here, seller here, big seller there, seller, right? So just like down here, the same rule applies in the short term. So I was thinking midterm next week, short term, short. This is how a trader thinks. What's the best play? The best play is a short. Why? Because you're stretched, you're starting to get aggressive, and you're moving into the seller, right? So the chances are high that person shows back up. And I always want every trader to remember that first and foremost. The word is this, right, Boyke? The phrase, it is until it isn't. Always assume that the buyer and the seller will reemerge until they don't reemerge, right? Now, if you want to make money